Okay, so I'll put a link below this video in the comment section. There's a video of Al Brooks. It's titled "Finding a Confusing Price," and it's by the channel it is on. It's called Money Capital M Money Capital S Show.com. Invest smarter, trade wiser. And they're interviewing Al Brooks, and Al Brooks simply states, well, he states that the markets are simply searching for support and resistance, and it's searching for value. In other words, it's searching for a fair price for both sides. So let's think about that for a minute. Why is that? Well, the markets are trying to be efficient, and because of that, if they're trying to be efficient, they are trying to make facilitate trading, make trading as easy as possible. And when I say easy as possible, I simply mean the ability to execute a trade. I do not mean literally make trading easy. Trading's hard. It's doable, but it's hard. And so with that said, the market's in search of neutrality. I'll make it real simple. Look at a monthly chart. If you didn't know this is a monthly chart, you can see. I don't really like that example, actually. Just find here. This is a great example. The market's quick to know when it's gone too high, and it just sells off. This was the top of the trading range. It's on the 9th, and you can see it right here. We broke above yesterday's high, top of this range, and we sold off to the bottom of the range, made a new low. Point being with what I'm saying here is, briefly, at brief times, but one side will step aside and give the other side control. Now, just because they're giving the other side control does not mean that it's a strong trend. It simply means that, well, if you're a bear, if you're a bull, why wait to buy up here if you know price is going to get on here? Just let it vacuum down. So my whole point is this. The market's in search for price that is fair, where bulls will say, just like Al said in the video, it's, for instance, here, it's an okay price to buy. It's not great, but it's okay. For the bears, it's an okay price for them to sell. It's not great, but it's okay. They know that if they scale in, if they buy this close, buy more lower, they can make money. If they sell this close, sell higher, well, why do you think we stalled back here? They know they can make money. It's just a neutrality point. So anyways, I was making the video and accidentally deleted it. So whoops. I was making it earlier. So I'm trying to remember what I was talking about here. So I guess what I was saying is, on days like today, yes, we had a strong move down and we may get more follow through. However, is this strong enough to sell off? Consecutive sell climax here, 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 here. However, we went sideways for 20, 30 bars. So this has probably already been forgiven, if you will. A lot of traders will start to just see this as one kind of sell climax. So I'm less certain about, did the bears, was there a 75% chance of 2 hours sideways down? I don't really know. I don't think that's not important. Just I'm gonna look real quick. Just look bar by bar. Trading range, doji bar, probably buyers below, sellers above. Breakout bar below, well, bull is probably gonna buy for at least a scalp. Tried to break above, failed. However, bears are gonna sell. You call double top and went down, up, down, up, down. In other words, down, pull back, here, so double top. You can also see it as double top with this point bend. You know, so yeah, I mean it's more of a large double top. Anyways, that's not the point. Truck trading range will probably get a breakout one way or the other. We got to the downside. Strong enough sell off. Bears selling need to stop up here, and as you can see, 50% pullback. Not an, the Bears are going to rely on their stop, and we're going to turn down more. 3 pushes down, but where's the good signal bar? And that leads me to think that as strong as this rally may be, we will probably find there's going to be sellers somewhere, So, where at, nobody knows. And here's another thing. You have a bad signal bar for the bulls. Weak buying by the bears. We have not touched the moving average, and this is one thing I recently found out about TradeStation. This thing's kind of cool. So I just took a trend line, connected from here to here, and if I format it, for any of you that have TradeStation, and I click Show Labels and Bar Count, 25 bars. And it's kind of neat. It can tell you, obviously, the bar counter, and self-explanatory. We've been away for 25 bars from the 5-minute moving average, so you have to ask yourself, the bears have been willing to sell below an average price for 25 bars. Yes, that does mean it's strong. It also means, well, why? This is not that strong down. There's not a lot of just aggressive selling. So that kind of makes me think a lot of bears really want to sell at the moving average. Think about what the moving average is. It's a fair price. It's an average price. Down here, why? I guess the best example I could think of is why sell a Lexus? Let's say you have a Lexus sports car or a BMW, a nice car. Why sell it for the price of a Honda Civic? Price went too low, and now it's got to go higher to find sellers. Well, this is not, think about what this is. In hindsight, this looks strong, but the reality is it's a perfect double top, 18 even, 18 even. I looked at the spider, the SPY, same thing, perfect double top. It's simply vacuum. The bulls stepped aside, the bears stepped aside knowing they can sell a perfect double top. They wanted to sell at the moving average, and they all came in, and we sold off. And we got a measure move down. So what's the biggest lesson today? The biggest lesson is until, let me put it this way. What does a bear channel mean? What is a weak bear channel? This is basically a weak channel. Well, bear implies trend, meaning by definition lower highs and lower lows. Channel, weak channel, means kind of one step below a breakout. So in other words, you can call it a slope trading range. It's a weaker form of a trend. However, it's a trend. Don't confuse yourself. It's so easy to look how strong this is and think, oh my gosh, if I buy, I'm almost guaranteed a measured move up. Well, and you might be. However, there's still the low probability chance. Think about this for a minute. Think about the math. I buy this close, or somewhere here, stop down here. Basically 1 times my risk up to here. Well, I hope I make myself clear here. The odds are, let's say, 40% chance. Let's just pretend 60% chance of second leg up, 40% chance of sell off. Well, so 60% chance I'll make a 1-to-1 ratio. And I don't think it's 60%, but just pretend it is. Well, if it's 60% chance, I will make, if I buy this clothes, stop down here, I'll get a measure, move up. If it's a 40% chance, or if I sell below here, if I stop, or maybe 20, 25, 30% chance I sell this close, stop above. Think of the math. You risk 1 point to make almost like what, 7, 8 points? So you have to understand, a lot of bulls, they're going to say, okay, well, they're going to say, show me the breakout. Why do we not break above this double top? And we failed. So you have to remember, strong as this wasn't that strong. It was still, it was pretty strong for the bear. So even though we're selling off, the bear, the bear is just going to say, okay, we're still making lower highs, so I'm going to sell. And guess what? Until it goes above a significant lower high, they're going to keep selling. So look right here. Now ignore this line. It's irrelevant. Here's 67% of a pullback. Well, why do you think this bar went exactly to 67%? If it's a trading range, a weak channel, and you want to sell, but you want to sell in the upper portion. Well, everybody wants to sell right here. Wonder why. Also, I stated in the prior video, you have to sell the close bar. You have a good bull bar closing when it's high. Let's say you sold this close, you're disappointed by all this. For whatever reason, you have a stop up here, up here. Well, good bull bar and a bear channel, I'll sell it. And look what happened. Price went 1 tick below the average price and turned up. That tells me a lot of bulls, a lot of bears were looking to get out of break even. So think about this. Look at all the bull bars. Good looking bull bars. Pretty good, It's so enticing in a channel to want to buy. However, you have to remember, bulls buying at the bottom, scalping out. They'll buy, scalp out. It's the bears are in control, and you have to remember that. So even if we rally, until we get above this high, who cares? That's what a lot of bears are going to say. Until it gets above here, it's still a channel. If we get all the way to here, bears are going to sell it to the last tick. You have to think about it. Look at the 60-minute chart. It's going to be a little messy. It's a tight channel. Lower high, new low. Lower high, new low. Lower high, new lows. So we have lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Doesn't matter the way you look at it. Doesn't look strong, they never do. But you have to remember, you have to understand what's going on. And if you don't, it's so enticing to buy up here, get stopped out, or sell here and exit. Here's how this works. It's the middle of the road. You either get out early or you trust your stop. So if you sell down here, you either get out below this bar, you get out somewhere quickly. Here's really not even a good example. Or where you put your stop up here and you wait. Here's a good example right here. You either get out above here, or you put your stop up here, up here. It's that simple. I would not put my stop up here. This is the reasonable target. It's a minor, it's not really that important. This is the most important. So you sell, and you put the stop up here. So you could do it right here. Sell as close, stop up here. I don't know. You could put it here. It's kind of difficult though, because if you put it here, you'll probably put it up here, and you get stopped out. You have to re-enter. But let's put it this way: you sell, stop up here, we pull back, make a new low, stop up here, pull back, new low, stop up here, maybe stop up here because time of day, new low, stop up here, and you could exit on the close, and you would end up making 23 points, give or take, actually maybe a little more. So I don't have too much to say. It's really kind of simple. I don't know if y'all can see this, but if y'all can, click. It's this channel, moneyshow.com, invest smarter. And if you scroll down, I didn't actually search for this, it just kind of popped up on my news feed, if you will, on YouTube. Here it is. 2 weeks ago, right here. So alright, hope everyone has a great evening.